If you've been researching Medicare, you've probably come across something called Medicare Supplement Plan F, and maybe you've heard people say it's the best plan out there, or maybe you've heard it's no longer available. Either way, there's a lot of confusion about what Plan F really is, who can still get it, and whether it's worth keeping in 2026. So in today's video, we're going to break it all down for you in simple, clear terms so you understand exactly how Plan F works, what makes it different, and how the upcoming Medicare changes in 2026 might impact your coverage and costs. Before we dive deeper, let me know in the comments, what's your age and what state are you in? I love to see who's planning smarter out there and how these changes might affect you personally. Let's start with the basics. Medicare Supplement Plan F, often just called Medigap Plan F, is one of the standardized Medigap plans that help cover the out-of-pocket costs left behind by Original Medicare, that's Parts A and B. When you have Original Medicare, you already know it doesn't cover everything. There are deductibles, copayments, and co-insurance that can add up quickly. That's where Medigap comes in. These plans are designed to fill in those gaps, hence the name Medigap. Plan F is special because it's historically been the most comprehensive Medigap plan available. It literally covers every single gap that Original Medicare leaves behind. That means with Plan F, you typically pay nothing out of pocket for any Medicare-approved service, no deductibles, no copays, no co-insurance. It's full coverage, plain and simple. But here's the thing that many people don't realize. Plan F was discontinued for new enrollees back in 2020. The Medicare Access and Chip Reauthorization Act, also known as MACRA, changed the rules for Medigap plans starting January 1, 2020. According to that law, anyone who first became eligible for Medicare after that date is no longer able to enroll in Plan F. So if you turned 65 or became eligible for Medicare on or after January 1, 2020, Plan F is off the table for you. However, if you were eligible before that date, even if you didn't sign up for Plan F right away, you may still be able to enroll in it. That's an important distinction, and it's where a lot of confusion comes from. So yes, Plan F is still alive for many people, but it's gradually phasing out as fewer and fewer people remain eligible. Now let's talk about why Plan F became so popular in the first place. The main reason is simplicity and predictability. For decades, Plan F was known as the set it and forget it plan. You pay your monthly premium, and in exchange, you have peace of mind knowing that you won't get hit with surprise medical bills. Whether you're going to the doctor, staying in the hospital, or getting outpatient treatments, everything Medicare approves is covered in full. That kind of security made Plan F extremely attractive to retirees who wanted to avoid unexpected healthcare costs. It was especially popular among those on fixed incomes who needed predictable monthly expenses. However, that level of coverage also made Plan F one of the most expensive Medigap options. Since it covers everything, insurers tend to charge higher premiums for it. And over the years, as more people joined Plan F and fewer healthy people entered the pool, premiums started to rise faster than those of other Medigap plans. This brings us to one of the biggest discussions happening right now. Is Plan F still worth it in 2026? The answer depends on your situation. For those who already have Plan F, the coverage hasn't changed, it's still as comprehensive as ever. But premiums have been steadily increasing, and in many areas, they're expected to continue rising in 2026 due to inflation and the shrinking pool of Plan F policyholders. The fewer people who have Plan F, the more the costs are spread among older, higher-risk individuals, which naturally drives up rates. Some people are starting to notice their Plan F premiums creeping up significantly each year, and that's causing many to consider switching to Plan G, which is often a better value in today's market. Now, let's clear up one of the biggest myths about switching. A lot of people think they can easily move from Plan F to another plan like Plan G whenever they want, but it's not always that simple. In most states, after your Medigap open enrollment period ends, you usually have to go through medical underwriting to switch plans. That means the insurance company can ask you health questions and potentially deny your application or charge you more based on your health history. So if you currently have Plan F and you're thinking about changing, it's important to weigh the potential premium savings against the possibility of being denied coverage or paying a higher rate. Every state and insurer is a little different, so this is where it really helps to talk to a licensed Medicare agent who understands your options and can check for any special enrollment rules in your state. Let's take a closer look at how Plan F compares to Plan G, since that's the plan most people switch to. The only difference between Plan F and Plan G is that Plan G doesn't cover the Part B deductible. That deductible is $240 in 2025 and expected to increase slightly in 2026. So the question becomes, is it worth paying higher monthly premiums just so you don't have to pay that deductible yourself? In many cases, Plan F premiums are $300 to $600 higher per year than Plan G premiums, which means you're often paying more for coverage that doesn't actually save you money. This is one of the reasons why many advisors recommend Plan G over Plan F for most people today, especially for new enrollees who can't even choose Plan F. Plan G gives you nearly identical protection but with a smaller price tag. If you're finding this information helpful, make sure to subscribe to our channel. We share important Medicare updates and guides every week. Now let's talk about how Plan F works behind the scenes and how claims are handled. When you have Plan F and you receive medical care, Medicare pays its share of the approved amount first. Then your Medigap Plan F automatically covers the rest. There's no paperwork, no hassle, and no guessing about what's covered. You can see any doctor or hospital in the country that accepts Medicare, no referrals, no network restrictions. That's a major advantage over Medicare Advantage plans, which often limit you to specific providers and networks. With Plan F, you have true nationwide freedom to choose your providers. This is one reason why people who travel frequently or spend time in multiple states prefer Medigap coverage over Medicare Advantage. But as we move into 2026, we're seeing some interesting trends. Plan F premiums in many states are projected to rise between 5% and 10%, depending on the insurer. That's not unusual, but it's important to note that other plans like Plan G or Plan N are seeing slower rate increases. Some analysts are calling 2026 a premium adjustment year for Medigap, meaning we'll likely see a continued shift of people from Plan F to other options. This doesn't mean you should rush to change, but it does mean you should review your plan annually and make sure it still fits your needs and your budget. It's also worth mentioning that Plan F has two versions, a standard Plan F and a high-deductible Plan F. The high-deductible version works the same way but requires you to pay a deductible, which is $2,800 in 2025 and expected to be slightly higher in 2026, before coverage kicks in. After that, the plan pays 100% of your costs. The trade-off is much lower monthly premiums. Some people who still qualify for Plan F are switching to the high-deductible version as a way to keep the same comprehensive coverage but save money each month. It's not right for everyone, but it's a good option to explore if your current Plan F premiums are getting too high. Another thing to remember is that Plan F, like all Medigap plans, only works with Original Medicare. It doesn't cover things like prescription drugs, dental, vision, or hearing. For prescription coverage, you'll still need to enroll in a separate Medicare Part D plan. And with 2026 bringing more changes to Part D, including the new $2,000 out-of-pocket cap, it's more important than ever to coordinate your Medigap and Part D coverage carefully so you're not overpaying or missing out on benefits. As for the future of Plan F, it's slowly shrinking, but it's not going away anytime soon. There are still millions of Plan F policyholders across the country, and as long as there are people who became Medicare eligible before 2020, insurers are required to continue offering it. That said, expect fewer insurers to offer new Plan F policies in the coming years, and expect prices to continue rising as the pool ages. For some people, the convenience and peace of mind are worth the higher cost. For others, it may make sense to compare Plan F with Plan G or Plan N to see if they can get similar coverage for less money. Before you make any changes, always look carefully at your total costs, not just the premium, but also deductibles, co-insurance, and potential out-of-pocket expenses. For many retirees, keeping Plan F might still make sense if they use their coverage frequently or have health issues that make switching risky. But if you're healthy, rarely see the doctor, and your Plan F premiums are climbing quickly, comparing your options for 2026 could save you hundreds of dollars per year. In short, Medicare Supplement Plan F remains one of the most comprehensive Medigap options ever designed, but it's no longer the universal best choice it once was. As Medicare evolves and premiums shift, it's smart to reevaluate your plan every year to ensure you're getting the best balance of coverage and cost. And remember, even though Plan F may be closed to new enrollees, understanding how it works helps you make better decisions about all your Medicare supplement options. If you found this topic helpful, we've covered other related Medicare updates you'll see at the end of this video. Watch those next for deeper insights.